Hi friends, very good evening all of you. So today we are going to discuss what is the agenda for the day. We are going to discuss CA Inter Group 1 Accounting Standards. This is going to be a super quick revision class of accounting standards for Group 1 for those students who are writing exams in November 2022. Okay, so let me open our beautiful ICAI study material. Okay, so this is our ICI study material. ICI from ICI website, I have downloaded this. So you can go to ici.org, their students, then board of studies. In that you can go to RTPs, revision test papers. There you can download either subject wise or attempt wise. You can download all four subjects of ICI group 1 from a single click, or you can download individually subject wise. So this is for accounting. Okay, so I think problem number 16 onwards, it is accounting standards. Yes, problem number 16 onwards, it is accounting standards. So guys, tell me, what is AS2? Let us start with AS2. What is AS2? Can someone tell me in the chat box, please? Be active, be active. The more you participate, the more you learn. Excellent. Inventory. Inventory. Okay. So it is valuation of inventory, correct. Abhinaya, it is valuation of inventory. To be more precise, it is valuation of inventory. Okay. So we'll see. So do we have any volunteer here who can read this? Can I invite Aishwarya or someone else? Aishwarya, can you read this, ma?
Yes, sir.
Hi, Aishwarya. How are you?
Fine, sir. Fine,
Okay.
sir. How are you, sir?
I'm great as usual. So can you read question number
Sir,
16, please?
Sir, before that, I have one doubt, sir. Can I
Yeah.
ask, sir?
Tell.
Sir, what about Group 2 accounting standards, sir?
Group 2 accounting standards tomorrow, ma. Same time tomorrow.
Yeah, okay, sir. Okay, sir.
Okay,
Thank
I'll
you,
send you the link. Okay, today we are doing group 1 accounting standards. Tomorrow we are doing group 2 accounting standards.
Okay, sir. Thank you, sir.
Okay, read this.
AS2 valuation of inventories. The closing stock of finished goods at cost of a company amounted to 4,50,000.
Hold on. Tell me, is this correct? Is the company correct in valuing their inventory at cost? Guys, tell me in the chat box, is the company following a correct accounting policy? They are valuing their inventory of finished goods at cost. Is it right? Excellent. Srivatsan, Srivadan, Sri. Okay. Shami, everybody is saying no. Excellent. Finished goods are to be valued at cost or NRV, whichever is lower or whichever is higher. You tell me. I forgot. I read it when I was a student, but after that I forgot. Is it cost or NRV, whichever is lower? So what we do is we will also revise the concepts. It is not just that we are doing only questions. We'll revise the principles also. We'll revise the principles also. So can I say here, finished goods? What is the valuation principle? Cost or NRV, whichever is higher, right? Higher or lower? Lower. Whichever is lower. Very good. Okay. Aishwarya, continue, please.
Yes, sir. Yeah. The following items were included at cost in the total. 100 codes which had cost rupees 2,200 each and normally sold for 4,000 each. Owing to a defect in manufacture, their NRV was determined at 50% of their normal selling price.
Okay, very good. So what is cost? 2,200. What is net realizable value? 50% of the selling price. What is selling price? 4,000. What is NRV? 50% of 4,000. So 2,000. So cost 2,200, NRV 2,000. Whichever is lower must be 2,000. But the company is following cost So they might have included 2,200 in inventory. So now you tell me, do you think inventory is to be written down now or inventory is to be valued upwards? What is to be done? Do you think inventory is to be written down now? Yes, very good. Excellent. Okay, continue please.
Shirts which had cost 50,000. Their net realizable value at balance sheet date was 55,000. Commission at 10% on sales is payable to agents. What should the inventory value be according to AS2 after considering the above item?
So is there any trap here? Shirts which costed the company 50,000. Very good. Cost of the shirts 50,000. Very good. Net realizable value 55,000. Commission at 10% on sales. Now you tell me, do I need to consider this commission 10% or no? Do I need to consider this commission 10% or no? Now listen. They have not given the estimated selling price on the balance sheet date. They have already given the net realizable value. That means already sales commission is deducted. If they say, see, this is a trap. This 10% commission is a trap. Now imagine if this is not 55,000. Now a student can say, okay, 55,000. Chalo, even if I subtract 10% commission, then also it will be 50,000. Cost is 50,000. NRV, even if I deduct commission, is also 50,000. So there is no risk here. Now imagine if this NRV is given 52,000. It is not 55,000. Imagine if it is 52,000. Then if you subtract 10% commission, your answer will be wrong. So this 55,000 is already net realizable value. It is not gross realizable value. It is already net realizable value. That means whatever the incidental cost, you call it brokerage, you call it commission, or you call it any other incidental expenses, they have already subtracted that. So we don't need to do anything. So do you think A needs an adjustment, or do you think B needs an adjustment, or do you think A and B both need adjustment? You tell me. Based on that, I'll solve the problem. Whatever you say, I'll solve the problem. So do you need A needs adjustment only, or do you need B only needs adjustment, or do you need A and B both needs adjustment? A only. Excellent. Everybody is saying A only. Okay. Okay. Very good. Very good. So put the heading problem number 1, accounting standard 2. Okay. Statement showing valuation of inventory. Statement showing valuation of inventory. Company name is not given. Balance sheet date also is not given. If it is given, we would have written statement showing valuation of inventory of X Limited as on 31st March 22. But we don't know the entity name. We don't know the accounting year. So we'll write statement showing valuation of inventory. Particulars, one inner column will write and one outer column will write. Particulars, rupees, amount rupees. Closing stock as per cost, 4,50,000. Closing stock as per cost, 4,50,000. Okay, adjustment. What is the adjustment required? Quotes. 100 quotes overvalued. What is the rule? Cost or NRV, whichever is lower. Lower of cost or NRV is to be taken. Okay, so how much is to be taken? Here you can write cost 2,200. NRV 50% of 4,000. That comes to 2,000. So value per one quote. Inventory value per one quote should be 2,000. Inventory value per quote should be 2,000. So how much of adjustment is required? Inventory to be written down. So decrease in value of inventory required. Can I say 100 quotes into 200 rupees extra you have put already. 200 rupees extra you have put. So I will subtract the 200. So 100 quotes into 200 rupees is 20,000. Is 20,000. Which is to be deducted. Minus 20,000. Therefore, value of inventory on balance sheet date is this. Subtract this 4,30,000. Value of inventory as on the balance sheet date is 4,30,000. 4,30,000. Okay. For B, for shirts, adjustment is not required. So we can write a note. Note. In case of finished goods, inventory is to be valued at lower of cost or net realizable value. The company followed cost. The company followed cost to value finished goods, which is inappropriate. Which is inappropriate. In case of quotes, NRV is lower than cost. Therefore, an adjustment downwards is required. However, in case of shirts, no adjustment required. Okay, this is what note we will write. At the end of answer, we will write a note. So guys, all of you understand this? Can we go to next question, please? Maria is saying yes. Abhinaya is saying yes. What about others? Minu, yes, very good. Srivatsan, Shami, excellent. So we'll go to next question. I have a general knowledge doubt. Before we go to next question, can you tell me what is the valuation principle of inventory in case of raw materials? One general knowledge doubt in case of raw materials. What is the valuation rule? Is it cost or NRV, whichever is lower? You tell me. Dhanlakshmi is saying it has to be checked with finished goods. Then Srivatsan is saying cost. What about others? What do you think? In case of raw material, is it cost or Minu? Excellent. Correct. In case of raw material, it is normally cost. In case of raw materials, it is normally cost. Okay. However, if finished goods, what finished goods in which this raw material is to be used? This raw material is going to be used in manufacturing some finished good, no? That finished good. If finished good in which this raw material is expected to be consumed. If finished good in which this raw material is expected to be consumed is expected to be sold at a price less than its cost. That means, what is the meaning of this phrase? What is the meaning of this phrase? That means finally finished good will be sold at a loss. What is the meaning of this? That means finished good will be sold at a loss. The moment you come across, that means finished good will be sold at a loss, next second student says, Pavan sir, if the finished good is going to be sold at a loss, that is an expected loss. We have studied in accounting standard 1, conservatism, prudence. So if there is going to be a profit, you cannot book profit now. But if there is going to be a loss, you have to book the loss now, isn't it? So using that principle, if the finished good is expected to be sold at a price less than its cost, then raw material is to be valued at its replacement cost if the replacement cost is lower than cost. Cost means purchase cost. So raw material purchased at, say, for example, 1 lakh. Raw material replacement cost is, say, for example, 80,000. So what is the value of raw material on the balance sheet date? A. If finished good is expected to be sold at a profit. Say, for example, finished good cost of production is, say, 80 rupees. Cost of production is 80 rupees. Okay, selling price 100 rupees. Then it is a profit. So if the finished good is expected to be sold at a profit, then raw material is to be valued at cost. B. If finished good is expected to be sold at a loss, for example, cost of manufacturing this or total cost of this finished good is 80 rupees, selling price is 70, then raw material is to be valued at what? You tell me, cost or replacement cost? Replacement cost. Correct. That's all. Accounting standard 2 ho gaya. We will see next one. Tadan, tadan, tadan. Property, plant and equipment. Okay, so who will read this question?
Can I
Hello,
read, sir?
hello. Read please.
RS Limited has acquired a heavy plant at a cost of rupees 2 crores. The estimated useful life is 10 years. At the end of second year, one of the major components, that is the boiler, has become obsolete, which is acquired at price of 50 lakhs and requires replacement as further maintenance is uneconomical. The remainder of the plant is perfect and is expected to last for next 8 years. The cost of a new boiler is 60 lakhs. Can the cost of the new boiler be recognized as an asset? And if so, what should be the carrying value of the plant at the end of second year?
So guys, tell me, what is the principle involved in this question? Are they speaking about the measurement concept? Are they speaking about the recognition concept? Are they speaking about subsequent editions? Are they speaking about major overhaulage or inspection cost? What they're speaking about in this? They're speaking about replacement of a major component. This was not there in earlier fixed asset standard. Old accounting standard 10, if you see, this concept is not there. This is addition in accounting standard 10, property, plant and equipment. That means obviously it is important. And also this model is already asked in CA final. That means this is your turn now. Important. Okay, so this is called subsequent recognition. So first you tell me, when a fixed asset or additions to fixed asset can be capitalized. So accounting standard 10. Accounting standard 10. Now you tell me, accounting standard 10, when an item be capitalized as a part of property, plant and equipment as per AS 10. So one student is saying, if there is substantive value addition can improve the life of the asset. This is old accounting standard. The answer you are giving is 5 years back answer. If it increases the capacity, if it increases the life of the asset. No, this is not the answer now. Okay, no need to say sorry. All of us are learning. Okay, so you are a student, I'm also a student, but I'm a big student. You are little smaller student than me, that's all. So there is no need of sorry. We are learning, all of us are learning. Okay, very good. So if, what is the answer? An item can be capitalized as property, plant and equipment, if it results in future economic benefit, FEB. future economic benefit. If it results in inflow of future economic benefits to the entity. B, is there any other condition? Hello. Is there any second condition? Yes. Measurement. The cost of such PPE, the cost of such item, the cost of such PPE shall be measurable reliably. So first one is, am I going to get the benefit? Second one is, am I able to measure the cost reliably? So that is the reason when you look at accounting standard 26 intangible assets, guys, there is a principle. Now you tell me, I forgot, you tell me, as per accounting standard 26 intangible assets, can internally generated goodwill be capitalized or recognized as an asset? Internally generated goodwill, can it be capitalized or can it be recognized as an asset? Everybody is saying no. Excellent. Why? So everybody knows that if I buy a business, for example, business combinations, mergers and acquisitions, amalgamation, I am buying another business, then I know how much I am paying. So the cost to acquire can be measured. But in case of internally generated goodwill, for example, if you look at Tata Group, that Land Rover Jaguar, which is a subsidiary company of Tata Motors, you have acquired it. You paid money. So obviously the purchase consideration minus the fair value of the net assets acquired is goodwill. You can capitalize it. But in case of Tata Motors, if there is internally generated goodwill, there can be 1 lakh crores worth goodwill. 1 lakh crores worth goodwill. But you cannot capitalize it because it cannot be measured. So an item of PPE can be capitalized if it gives you future economic benefits. A. B, if cost of such PPE shall be measured reliably. You understand? If these two conditions are satisfied, then you can. And now the present question is about replacement of a major component. It is very important for you to write this. The present question is about replacement of a major component. That means the person who's evaluating your paper, you are telling him that, hey, bro, listen. Do you know that I know the concept? So you have to tell this. So the present question is about replacement of major component. So when replacement of major component can be recognized, same criteria, A and B, future economic benefits and cost. Now, will it result in future economic benefits? Obviously, yes. Is the cost measurable reliably? Clearly, they have said the cost of new boiler is 60 lakhs. So, guys, question number 1 satisfied? Yes, sir. Question number 2 satisfied? Yes, sir. Can it be capitalized? Yes, sir. It can be capitalized. Now, in case of replacement of a major component, what is the accounting treatment? In case of replacement of a major component, what is the accounting treatment? A, the cost of new component is to be, you tell me what to do. The cost of new component is to be capitalized, recognized, derecognized, added, subtracted, multiplied, square root. What should I do? The cost of new component, I forgot. I have this tendency of forgetting everything. Okay, you have to tell me. Is to be capitalized. Correct. What is the exact word to be used there? Vocabulary. You can say capitalized, you can say added, but both of them, it is not correct vocabulary. Recognized. Now LKG student also tells this. LKG student also tells this, but only CA intermediate student can tell second point. You tell me what is second point. LKG student also can tell first point, but CA inter student is expected to know second point. What is the second point? The written down value, oh my god, of old component is to be ta-dan, ta-dan, ta-dan. You tell me what to do. De-recognized. Excellent. The WDV of the old component is to be de-recognized. Those who said de-recognized, just you have thrown a stone in the water, and your luck is enough. Today planetary position is good, so it has hit the correct button. So the WDV of old component is to be de-recognized. Okay, now statement showing calculation of carrying amount. Calculation of carrying amount of asset as per accounting standard 10. Particulars rupees, amount rupees. Particulars rupees, amount rupees. Okay, so cost of the asset. Cost of the asset. Is it given in the question? Cost of the asset. Cost of heavy plant, 2 crores. So can I take 2 crores here? Cost of the asset, 2 crores. So when the company purchased it, the estimated useful life is 10 years. Okay. At the end of second year, that means 2 years you have already used. So less accumulated depreciation for 2 years. So can I say 2 crores divided by 10 years into 2 years? I don't know numbers, you have to tell me. 2 crores divided by 10 years into 2. How much? I don't know. You tell me, sir, it is 40 lakhs, I'll write 40 lakhs. Or you tell me, sir, it is 2 rupees, I'll write 2 rupees. I don't know. 40 lakhs. 40 lakhs. So carrying amount of asset before replacement of component. Is it this? Add cost of component replaced. How much? 60. Add cost of component replaced less WDV of old component. This we can say cost of new component. This is new component. Cost of new component. Cost of component replacements, new component. WDV of old component. Now look here. This 2 crore rupees. This 2 crore rupees includes one boiler whose cost was 50 lakhs. On the date of acquisition, this 2 crores includes 50 lakhs. If this is 10 years, this is also expected to be 10 years unless otherwise mentioned. Pavan sir, there is no additional information given about the boiler. So I assume that this is also having 10 years. So out of 10 years, you have used this for 2 years. Correct? So boiler 50 lakhs minus accumulated depreciation. What is accumulated depreciation? 50 lakhs divided by 10 years into 2 years. So it is how much? 50 lakhs is the cost minus accumulated depreciation. 50 lakhs by 10 into 2. Is it 10 lakhs? 50 minus 10. Is it 40 lakhs, guys? Hello, is it 40 lakhs? Hello. I need your participation. Otherwise, I'm not teaching it for myself. I'm teaching it for you. Okay, so carrying amount of asset after replacement of component. Can you tell me the answer, please? Hello. This is the answer. 18 lakhs. It is 1 crore 80 lakhs, ma. 180 lakhs. It is not 18 lakhs. Okay. After becoming chartered accountant, you play with numbers, not as a student. After becoming CA, you know, Pavan sir, I did not like 2 zeros out of 7 zeros, Pavan sir. Can I remove? That is up to you. Because you are a CA. Not now. Now, if you remove 1 zero, ICI will remove 5 marks. Correct. So, shall we check the answer? Shall we check the answer? Oh my God. Did we get correct answer? Yes, Pavan sir. Okay. So, can we go to next question, please? Who is going to read our question number 18? I want a new voice. So who's going to be the next voice? Indian Idol 13. Who's that? Can you show me the answer once more? Yep. Maria. Okay, done. So Abhirami. Hello, Abhirami. Can you read the question?
Yes, sir.
Can you read the question? Hi, Abhirami. Where are you from?
Kochi.
Very good. So you're understanding the questions, ma?
Yes, sir.
Only questions you're understanding, answers also.
Yes, sir. Both, sir.
Read question number 18, please.
A company had imported raw materials worth US$ 6 lakh on 5th January 2022 when the exchange rate was ₹43 per $. The company had recorded the transaction in the books at the above mentioned rate. The payment for the import transaction was made on 5th April 2022 when the exchange rate was ₹47 per $. However, on 31st March 2022, the rate of exchange was ₹48 per $. The company passed an entry on 31st March 2022, adjusting the cost of raw materials consumed for the difference between ₹47 and ₹43 per $. In the background of the relevant accounting standard, is the company's accounting treatment correct?
So they're asking in the background of relevant accounting standard. What is relevant accounting standard here? Is it AS4 or AS49? No, it is AS 2122. No, which accounting standard? Because it is classroom discussion, they have given AS11 here. Trust me, guys, the moment someone reads this question, foreign exchange, US dollar, their heart comes into pant. They'll be like, no foreign question, no foreign exchange question. Students are so scared of this. But let me tell you, AS11 is probably one of the easiest standards, provided you understand the concepts. Okay, now, so here, how many dates are there? 5th Jan, okay, exchange rate 43. Okay, this is the date on which the company purchased. So 5th Jan, let me write here, 5th Jan 2022, the company purchased 6 lakh US dollars worth raw materials when the exchange rate was 43. 43 exchange rate. Okay, this is the date. Exchange rate rupees per US dollars. Okay, 5th Jan. After that, they have given on 5th April, payment is made. Oh my God, payment is made on 5th April. That date is 47 rupees. 5th April 2022, 47 rupees. So this is date of import of raw material. This is date of payment to supplier. Date of payment to supplier. In between, one more date is there. What is that? Marriage date. For every accountant, one new marriage on 31st March. Balance sheet 31/3/2022, which is balance sheet date, reporting date. Okay. On that particular day, exchange rate is 48. So I'll put 31st March 2022. How much it is? 48. What is this 48? It is balance sheet. Now, what the company has done? What the company has done? Here they said the company passed an entry adjusting cost of raw materials. Oh my God. Entry to adjust cost of raw materials. So this, you tell me, this is right or wrong? The company did this. The company did some nonsense. Do you think this nonsense is right or wrong? Maria is saying wrong. Abhinaya is saying wrong. Some students are thinking, we will tell wrong, no problem, because in accounting standard question, whatever the company does, majority of the cases, it will be wrong. If company does right, I don't need to write answer, no. Have you ever seen any answer in ICI study material or RTP or any previous examination question suggested answer? Have you ever seen, the company has done correct? No. So whatever company does, 99% of the cases, it will be wrong. So it is very easy for you to tell, no, sir, what company did is wrong, sir. Then Pavan sir will ask one more question. If what company has done is wrong, what is right? What is right? Okay, now look here. Now look here. On the date of purchase, you tell me the journal entry. See, I tell you one thing. Accounting standard 11, unfortunately, in ICI study material or in any of the approaches, in any of the academic literature of ICI, they always explain descriptively in 1-2 paragraphs. But the best way to understand is pass a journal entry. Then only you will understand. Pass a journal entry. So on the date of purchase, what is the journal entry they might have passed? You tell me. What is the journal entry? Raw material account or inventory account. Inventory account debit to supplier account. Correct now? This is the journal entry. Do you agree with me? Okay, inventory account debit to supplier account. Do you agree with me? You can write purchases account debit to supplier account also. No problem. But you can write inventory account debit to supplier account also. No problem. So here they might have written it at 43. They might have written at 43. They might have written at 43. Okay. This is correct. No problem. This is correct. On the date of balance sheet, what is to be done? This is, my dear friend, accounting standard 11. Welcome to the world of accounting. What they do is, on the date of balance sheet, all dash assets are to be revalued to reflect their fair value. Revalued at their fair value on balance sheet day. Revalued on the closing rate, or you can say revalued using the closing rate. Fair value means nothing but closing rate, using the closing rate. What is closing rate? Closing rate is the exchange rate on date of balance sheet. All dash assets are to be revalued using the closing rate. B, all dash assets are not to be revalued. Are not to be revalued. That means no adjustment to these assets. No adjustment. You don't dare to put finger in this asset. That means accounting standard 11 classified the balance sheet items into two. This basket, revalue. This basket, don't touch. This is what accounting standard 11 said. All the balance sheet items, be it asset, be it liability. All the assets and liabilities are classified into monetary, non-monetary. You remember that? Idiots, half of them, they do not remember the wordings also. Now you tell me, there are two items, monetary items, non-monetary items. So which one is to be revalued? Monetary item or non-monetary item? Which one is to be revalued? Need not be asset. Here you can write items. Okay, because this principle applies to liability also. So monetary items have to be revalued. All monetary items have to be revalued. So here, non-monetary items are not to be revalued. Don't dare to put your finger here. Monetary items are to be revalued. Non-monetary items, once recorded, leave it. Now another doubt. What is monetary item? What is non-monetary item? Monetary items are the assets and liabilities. Monetary items are the assets and liabilities which are expected to be realized or paid at a predetermined rate. That means on the date when I liquidate this asset, how much I get, I know already. So it is not uncertain amount, it is certain amount. Pavan sir, I have an asset, Pavan sir. Very good. Pavan sir, when I sell the asset, exactly how much I get, I know, Pavan sir. Okay. Pavan sir, what is this? Monetary item. Pavan sir, I have one asset, Pavan sir. But if I sell the asset, exactly how much I'll come to realize, I don't know, Pavan sir. It depends on that particular day's market. That is a non-monetary item. Okay, can you give me one example of monetary item, one example of non-monetary item? Okay, you tell me. Fixed deposit. Fixed deposit. Is it a monetary item, non-monetary item? I have put money in bank. So when I liquidate the asset, that means when I go and on maturity, when I take it, do I know exactly how much I'll collect, or it is uncertain amount? So fixed deposit is monetary item. What about debtor? Debtor is monetary, non-monetary. Debtor is monetary item. Exactly, I know how much I have to collect. Exactly, I know how much I need to get. You don't need to create an element of dilemma here, Pavan sir, but we don't know whether we collect. That is a different concept. Collectibility is a different concept. But when you are liquidating, how much you will get, the amount. If there is a certainty or uncertainty or a significant uncertainty, that is a different story. But you have a legal right. You sold goods at 5,000 rupees. You have legal right to collect 5,000. That you know. You understand? Now you tell me, debenture. Debenture is a monetary item or non-monetary item? Now see, my intention is not to teach you this particular problem. My intention is, I am giving you an overall revision of the standard, which is actually very useful. Debentures, are they monetary or non-monetary? Debentures, are they monetary or non-monetary? Debentures are monetary items. Debentures are monetary items. Because if you are the company which issued debenture, you know how much is to be repaid, na? On the date of maturity, on the date of redemption, how much to pay? There is a contract, dude. Come on. Debenture deed is there. Debenture receipt is there. Contract. Even if you are an investor, you know how much you will get on the date of maturity. Pavan sir, I purchased debenture from Infosys, Pavan sir. I purchased a debenture from Infosys. Do you know how much you paid? Yes, 100 rupees. Do you know how much you will get? Yes, after 5 years, 110 rupees. Then it is a monetary asset. Now you tell me, loans given, monetary, non-monetary? Loans given, monetary, non-monetary? Monetary. Excellent. Loans taken, borrowed. Monetary, non-monetary? Monetary. Now you tell me, raw material. Is it monetary item? You have raw material in your godown. Is it monetary item, non-monetary item? Raw material inventory. Fast. Raw material inventory. Okay, non-monetary. Okay, now you tell me. Suppliers, creditors, accounts payable, creditors, monetary item, non-monetary item. Creditors, monetary item, non-monetary. This shameless guy, this shameless accountant adjusted this. Which is to be adjusted? This is to be adjusted. What he adjusted? What should not be adjusted is adjusted. What is to be adjusted is not adjusted. Wow. Congratulations. Go to the accountant, catch his collar, kiss him with left shoe. So what you need to write? Inventory is a non-monetary item as per accounting standard 11. Therefore, the value of inventory should not be adjusted to reflect foreign currency exchange gains or losses. This is the rule. Inventory is a non-monetary item. Therefore, the value of inventory should not be adjusted to reflect foreign currency exchange gains or losses. Supplier or creditor or accounts payable, you call anything, they are same synonyms, is a monetary item because you need to pay it. Is a monetary item. Therefore, adjustment is to be made to this item to reflect foreign currency exchange gains or losses. So on the date of balance sheet, what is the journal entry to be passed? Now look here. 43 rupees has become 48. You bought something at 43, now it has become 48. Is it a loss for you or a profit for you? You tell me. Is it foreign currency gain or is it foreign currency loss? It is a loss. Correct? How much? 5 rupees loss. 5 rupees loss. So 6 lakh US dollars into 5 rupees. You bought goods for 6 lakh US dollars. Per dollar 5 rupee loss. So 6 lakh into 5 rupees. Correct? Now, can I adjust this inventory? No. Do I need to adjust supplier? Yes. Okay. So where to write the difference? P&L. So supplier is to be increased to 48. So what shall we write? Foreign currency exchange loss account debit to supplier. 5 rupees. So total will be 6 lakh US dollars into 5 rupees. So total journal entry will be for 30 lakhs. Total journal entry will be for 30 lakhs, but I'm writing only for $1. Foreign exchange loss account debit to supplier. So immediately you'll have to pass another journal entry also. Immediately you need to pass another journal entry. Implied, you need to pass another journal entry. P&L account debit to loss account. This loss, 5 rupees, should be transferred to P&L, isn't it? That should be recognized in P&L. So you can write profit and loss account debit to foreign currency exchange loss account. Correct? Correct? So instead of writing these two journal entries, some lecturers, what they say, here itself they'll say P&L account debit to supplier account. Actually, there are two journal entries. Loss account debit to supplier. P&L to loss. In P&L, to foreign exchange loss, 5 rupees. Okay, so to combine these two journal entries, what some lecturers will tell? Some lecturers will tell, write down P&L account debit to supplier. Or descriptively, if they are giving the answer, no, they will say a loss of 5 rupees is to be recognized in P&L and supplier account is to be credited. So this is what actually the accounting is. Now, on the date of payment. On the date of payment. Okay, now these are the rates. When you bought it is 43. You revalued it to 48 on the date of balance sheet. But on the date of payment, again, it came to 47. Guys, trust me, the same question I have done when I was a student, okay? The, hilarious or surprising thing here is, the funny thing here is, ICI is not even changing the exchange rates. When I studied CA, that day, dollar versus Indian rupees, if you see 40, 43, 48, that makes sense. Today it is 84, 85 now. So the same question is given in this RTP without even changing the numbers. Very, very, very important model. Very important model. So now on the date of payment, 1 rupee reduced. Now you tell me, is there any foreign currency gain here? Yes, 1 rupee foreign currency gain. 1 rupees foreign currency gain. You will take the 2 P&L. That's all. Okay. Now. When you are making the payment, now today you tell me, today in my books, what is the carrying amount of supplier? At what rate supplier is there in my books? 48. Okay, now you tell me today how much I need to pay. Today in my books 48. How much I need to pay? 47. So will you make payment of 48? No, you will make only 47. So what is the journal entry? Supplier account debit to cash account or to bank account. You will pay 47. But now you will tell, but sir, Pavan sir, already this is 48 in our books, sir. So this is 48. This is journal entry. Supplier account debit 48, which is already there in your books, which is to be derecognized now. You are making the payment, so supplier account is to be reversed. Cash 47 you are paying, so to cash account 47. Supplier account debit to cash 48, 47. Wow, super. This is called creative accounting. Now Chintu will get it out. Sir. In my 11th class, my teacher told debits and credits should be equal, sir. Sir, when you are shaving your hair on the head, part of your brain also has fallen down, sir. How can you pass this journal entry, sir? Now tell me, 1 rupee I'll write here. What will you write? To foreign currency exchange gain account, which goes eventually to P&L. You'll write to foreign currency exchange gain account, which goes to P&L. So instead of writing foreign currency exchange gain here, and then you will write foreign currency exchange gain account debit to profit and loss account. So 1 rupee. Instead of, passing these two journal entries, you can write supplier account 48 to cash 47 to P&L 1. This problem is over. Now you tell me, how many of you understood this? Very good. So what is the conclusion you need to write? The accounting treatment given by the company in its books is incorrect. The accounting treatment given by company in its books is incorrect. They did not do it properly. It is incorrect. Okay. So shall we read the solution once? Shall we read the solution once? So who's gonna read? Someone please read this.
As per AS 11,
Hmm.
revised 2003, the effects of changes in foreign exchange rates, monetary items denominated in a foreign currency should be reported using the closing rate at each balance sheet date.
So did I tell you this? Monetary items
Yes.
are to be revalued using the closing rate? Yes.
Yes.
Continue.
The effect of exchange difference should be taken into profit and loss account.
Did I tell you the exchange rate, whether it
Yes,
is
sir.
a gain or a loss, it should be taken to P&L. Yes or no?
Yes, sir.
Yes.
Trade payables is a monetary item.
Did I tell you
Then,
trade payable is a monetary item? Yes. Continue.
hence should be valued at a closing rate, that is 48 at 31st March 2022, irrespective of the payment for the same, subsequently at lower rate in the next financial year.
Correct.
The difference of 5 rupees, 48 minus 3 per US dollar should be shown as an exchange loss in the profit and loss account for the year ended 31st March 2022.
So look here, they said the difference of 5 rupees, which is the difference between 48 and 43, should be shown as exchange loss in P&L. This is what I told you. They will tell you descriptively. But guys, you tell me, unless you pass all the journal entries and the thought process of what I gave to you, in the last 5-10 minutes, unless you pass those journal entries, do you think there will be clarity in the mind? See, you understand this sentence, but what is the meaning of this sentence, you will not understand. To understand the actual essence, you need to pass journal entry. So this 5 rupees should be recognized. 5 rupees should be recognized as a foreign currency exchange loss in your P&L. Okay. And is not to be adjusted against cost of raw materials. Is not to be adjusted against cost of raw materials. This is the most important thing. The company did this, which is wrong. Okay. Continue, please.
In the subsequent year, the company would record an exchange gain of ₹1 per US dollar. That is the difference between 48 and the 47 per US dollar. Hence, the accounting treatment adopted by the company is incorrect.
Super. So, guys, all of you understand this. If you understand this, give a thumbs up. Then we'll go to next question. If you understand this, give a thumbs up. Then we'll go to next question. Very good. Super. No student will ask, sir, how to give thumbs up? I don't know, sir. Okay. Now, can I ask one general knowledge question? Hello, guys. Are you ready for a general knowledge question? One student, Raj Kumar, is writing on my screen. Hey, idiot, write in your notebook. My screen is not a canvas for you. Sir, do one thing, sir. Go to more, sir. Okay. Disable annotation for others, sir. Okay. Sir, now people cannot write, sir. Okay. Hello, general knowledge question, yes or no? Sir, normal knowledge only we don't have. Where general knowledge will have, sir? Okay. Now the question is, when a company purchases raw materials, what is the correct journal entry to be passed? Ta-dan, ta-dan, ta-dan. 1, inventory account debit. 2, bank or creditor account. 2, purchases account debit. 2, bank or creditor account. Which one is correct? Is 1 correct or 2 correct? Deepak is saying 2. Srivatsan is saying both are correct. Okay. Akshay is saying both are correct. This question, I remember I asked, one chartered accountant, newly qualified chartered accountant. So one company is taking accounts manager. So they called for interviews. Many chartered accountants came. Few are experienced, few are new. I asked one of the chartered accountants this question. He couldn't answer. His answer was wrong. I gave job to him because he's knowledgeable, but he couldn't answer this properly. Rafi is saying 2. So, is it like either they can pass 1 or they can pass 2? No. In a specific situation, 1 is correct. In a specific situation, 2 is correct. They are not, like interchangeable. Either write that or write this. No. In a specific situation. No, it is not either one. It is not like either you can write 1 or you can write 2. You'll get a mental assault. Get ready for heart attack. Okay. Get ready for heart attack. If the company follows, EA, perpetual inventory system, then 1 is right. If the company follows year-end inventory system, B is right. If the company follows perpetual inventory system, for example, you go to Reliance Fresh, you purchased, one commodity. You purchased, say, for example, Pond's powder, okay, or you purchased one Park Avenue spray. So, do you think the moment in the billing counter, the person, the employee took the Park Avenue deodorant, the spray, and then he has shown barcode reader? Do you think the inventory system is so dynamic that it will reduce from the books? 1 item of inventory will be reduced. So before this transaction, there were 97 deodorants, 97 Park Avenue deodorants in the books. Do you think the moment it is recognized, 97 will become 96? Do you think so? So the inventory management system is so dynamic that it perpetually, online real-time basis, considers inventory. Do you think so? The answer is yes. If that is the case, Reliance Fresh will pass the journal entry like this. Perpetual inventory system. You go and purchase the same Pond's powder or same Park Avenue deodorant from a roadside small traditional provisional shop, sole trader, small shop. In that shop, you went and asked, Anna, you have Park Avenue spray? He said, yes, give 1 spray. So he has given spray to you. You asked how much? He said 150. You have given 150 rupees. Do you think he has inventory system where it is dynamic to understand that before this transaction, 8 deodorants are there with me. After this transaction, 7 inventory are there. So do you think they have an inventory system like that? Anna has inventory system like that. No, Anna is not having inventory system like this. So Anna has to purchase. He has to write this journal entry. Purchase account debit to bank or creditor. You understand? Whenever he purchases, he purchased 10. He went to wholesale market. Srivatsan is saying, really happy to learn this concept, sir. Thank you so much. Thank you so much. So, see, I tell you one thing. And Deepak is saying, no faculty explained this. Deepak, I do not find fault with any of the faculty. Rather, what I say is, when you are practically into the systems, you will understand these kind of things. Okay. So, chalo. When we come back to the example, this guy, the provisional store owner, he went to wholesale market, purchased 10 deodorant bottles. He will write purchase account debit to bank. After 5 days, again he went and purchased another 10 bottles or another 20 bottles. Again he will write purchase account debit to bank. Again he purchased 25 bottles. Again he'll write purchase account debit to bank. Throughout the year, every day, whenever he purchases, he will write only purchases account debit to bank, purchase account debit to bank, purchase account debit to bank. At the end of the year, 31st March, he or his accountant will go to the window display where these deodorants are shelved. He will go to the shelf and he will count. He will count Park Avenue deodorants. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 22 bottles are there. Then he will recognize inventory of this 22 by reversing purchases. Then he knows what is the cost of this 22 inventory bottles. So his, imagine, cost is 100 rupees, selling price is 150. That much of profit will not be there, I know, but cost is 100 rupees. Imagine. So he will say 22 bottles are there, 22 into 100, 2200. So now he will pass the journal entry. Now he will pass the journal entry. Inventory account debit to purchases account. Year-end inventory system. You understand? My students, especially at final level, okay, that level is fine. Final level, they pray, Pavan sir should not prepare my exam question paper. Pavan sir should not come as interview panel member when I am going for any interview. And Deepak is saying extreme level. Thank you so much, Deepak. Thank you. So, shall we go to next question? Hello. Shall we go to next question? Okay, if you are ready, type next. Then we'll go to next question. If you type next, I want to get 25 next. After that, I'll go. Till the time break for me. 1 next, 2 next, 3, 4, 5, 6. One student is sending 4, 4, 5, 5 next. Na Raja. What an idea, Sergi. Very good. Okay, let us go to accounting standard 12. Now I want a new singer. Who will be our new singer? Sai Kripa, your host came. Hello, Sai Kripa madam, how are you?
Hi, sir. I'm good. How are you?
Hey, I heard. Do you play violin?
I do play, sir.
Did I hear any of your violin clips somewhere?
Yes, I guess.
How?
I posted it recently.
Yeah. Good. So till what level you learned?
Sir, I am still learning, but not regular though classes.
Okay. So at what level you are?
Sir, I'm basically learning Carnatic. So I have already learned a lot of Kirtanams.
Oh, you learned Kirtanams also?
A lot, sir.
I am stuck in Varnams.
That's okay, sir. It will progress.
What
Varnams
progress?
also great.
Last 2 years I am there only.
Oh, there are a lot to learn in Varnams also, so no problem, sir.
True. I don't know. We'll see. Okay, so my teacher is also from Cochin. She's actually a Tamilian, but she is also a chartered accountant, okay, cost accountant. She is a partner in one of the chartered accountant firms. She teaches me vocal.
Oh, that's nice.
Very nice teacher. Very nice teacher. Chalo, anyway. So today it is not music session. Today it is accounting standard session. So Sai Kripa, can you read question number 19A for me, please?
Yes, sir. Samrat Limited has set up its business in a designated backward area which entitles the company for subsidy of 25% of the total investment from Government of India.
Okay.
The company has invested 80 crores in the eligible investments.
So 80 crores they have invested. There is a government policy that in this area, if you start factory or if you start your business setup, you'll get 25% of total investment. So how much you'll get? 80 crores into 25%, how much? Hello?
20 crores.
20 crores. Very good. Continue.
The company is eligible for the subsidy.
Ray. Who's that? Read one.
And has received rupees 20 crores from the government in February 2022.
Okay.
The company wants to recognize the said subsidy as its income to improve the bottom line of the company.
Wow.
To approve the action plan of the company in accordance with the accounting standards.
The company wants to recognize the said subsidy as income. Why? You want to improve the bottom line. Hey, what is bottom line? What is top line? What is bottom line? Bottom line means profit. Top line means revenue. Pavan sir, what language this is? Corporate. You go to Big Four. In Big Four, they will never ask what is the sales revenue of the company. They'll ask, hey, what is your top line? Top line means revenue. Bottom line means profit. Okay, so the company wants to improve the profit of the company. So they recognized this 20 crores as income. Now you tell me, do you think this is correct accounting? Hello, guys. Tell me, do you think it is correct accounting? Kavi is saying no, Maria is saying no. Actually is saying as usual wrong. So whatever company says, it's wrong, okay? And I'll tell you one more technique, but don't use it blindly, okay? Don't use it blindly. In case of dilemma, benefit of doubt will be there, no? Okay, even the third umpire, he will do 4 or 5 times, you know, whether it is run out or no. Finally, he'll give benefit of doubt to batsman. Okay, like that, I'll give you one small tip. In auditing, they will write the director of the company contended so and so, the auditor contended so and so. Always auditor version will be right. Why? Auditor is member of ICI, no? Who is giving question paper? ICI. So how will ICI give a question paper where ICI member is doing wrong and the company director is doing right? Unlikely, no? So here also, whenever company is doing something, they are doing it wrong. Now, according to AS 12, revision. Let us not only focus on this particular problem. Let us go to accounting standard 12. What is accounting standard 12? Government grants. How many types of government grants are there? Can I say government grant nature accounting treatment? Can I say government grant for acquiring non-depreciable assets? Oh my God. Can there be a government grant for acquiring non-depreciable assets? Hello, fast. Can there be a government grant for acquiring non-depreciable asset? Land. Don't you think government will give land at subsidized rate or free of cost? Yes. So can I say government will give grant for acquiring depreciable asset? Non-depreciable assets, depreciable assets. 3. So these are specific assets. These are specific grants for acquisition of assets. 1 and 2 are specific grants for acquisition of assets. Can I say government can grant something, what do we call, in the nature of revenue? In the nature of revenue, for example, in the nature of revenue, for example, staff training, or for example, in case of hospitals, treatment to below poverty line. Okay, services to white ration card holders below poverty line. Okay, so if your entity is giving treatment to people below poverty line, government will give you grant. Or if you are doing some kind of staff trainings, government will give you grant. Concessional loans they will give you. Concessional loans, for example, you look at agriculture sector. Agricultural loans, fair value, interest rate will be 12%. Market rate will be 12%, but government will give it 3%. So these are in the nature of revenue. So in the nature of revenue means either to reduce the company's cost or incentive to company. It can be to reduce company's cost. For example, I have a school. I teach 500 students. Government has given a notification. To all the school management. What is the notification? From these backward areas, if you take up students from economically backward, unfortunately, underline in India, it can be caste based also, or religion based also, or region based also. Okay, but it should be economically backward category. So imagine there is a notification. So based on the notification, Pavan, you take 100 students from this below poverty line, 100 students who are economically poor, and you give training to them. You teach them, you coach them, you make them employable, you make them knowledgeable. Pavan will give you 5 lakh rupees. That is also in the nature of revenue. So remember guys, when government gives you a grant which is not for acquiring any asset, that will be category 3. Category 1, category 2, category 3. Then there comes category 4. Oh my God. In the nature of promoter contribution. Shit. What is this? In the nature of promoter contribution. That means no conditions attached. Here there is a condition. Here there is a condition. Here there is a condition. Here no conditions attached. So normally in case of 4, no condition plus no refund. This is not returnable grant. This is not returnable grant. Say for example, if you look at Hyderabad, if you look at Bangalore, if you look at Pune, if you look at Noida, if you look at Gurgaon, these are the 5 places where BPO, KPO, IT parks. You look at Bangalore, you look at Hyderabad. It started in Hyderabad 20 years back. I remember. Then Bangalore, then Pune, then Noida, Gurgaon. All these big multinational companies, they have set up their training centers, their assembling centers, their BPO centers, their customer care centers here in India. Why? Subsidies given by government. 300 acres, 400 acres, free of cost, this, government will give. Now, Pavan sir, what is the benefit the local government get? Obviously, employment, infrastructure. So how much of, prices will increase like hell? Maybe price increase, real estate and all is not the valid reason, which actually is. But, from the development point of view, the vicinity will get developed. Telecommunications will come, infrastructure will come, this Wi-Fi, water facility, everything will come, and employment. That is the reason what they say, you set up your project in industrially backward area, any backward district notified by central government or state government, you get the incentive. Once you set up your business there, they will give you, whatever this 25%, 20%, 50%, whatever, it is, they will give you, but you don't need to comply with any conditions. And on failing to comply with conditions, you don't need to give this money back. That is what we call government grants in the nature of promoter contribution. Government grant in the nature of promoter contribution. Now, guys, you tell me, I told you there are 4 types of government grants. You tell me, in the given question, this question, RTP, we have read one question now. Do you think it is falling in category 1 or 2 or 3 or 4? You tell me. I don't know. I don't know. You tell me. Deepak, 3 is revenue, 4 is capital. He's asking what is the difference between 3 and 4. 3 is revenue, 4 is capital. Point number 1. 3 will have so many conditions, 4 will not have conditions normally. Maria is saying 4, 4, 4, 4, 4. Everybody is saying 4. Answer is 4. Excellent. Excellent. Now let us look at the accounting treatment. In case of government grant towards a specific asset, acquisition of a specific asset which is non-depreciable, do you think it should be credited to capital reserve, or is there any other alternative accounting treatment? What should I do? In case of 1, what should I do? In case of 1, what should I do? Capital reserve. So what is the journal entry? Land account debit to capital reserve. That's all. That's it. Non-depreciable asset came, land account debit to capital reserve. Say for example, 100 crore rupees land, state government has given it at 40 crores. Okay, so 100 crores worth of land. State government has given it to X Limited for 40 crores. What is the journal entry? Land account debit to cash account or bank account. 40, 40. Is it right? Or do you think land account debit 40, land account debit 100 to cash account 40 to capital reserve 60? Which journal entry is correct? Do you think journal entry 1 is correct or journal entry 2 is correct? 1 is correct or 2 is correct? Journal entry 2 is correct. Why? You know why journal entry 2 is correct? There is one accounting concept involved in this. There is one accounting concept involved in this. Do you know what is that accounting concept? Is it conservatism? Is it prudence? Is it going concern concept? Is it materiality concept? Is it realization concept? Is it matching concept? Is it your head concept? Is it my tail concept? Which concept it is? It is substance over form. The legal form is that you paid 40, you got land. The substance is you paid 40, but you got 100. So there is a capital reserve 60. So what is this? What is this? What is this? Substance over form. The biggest driver of accounting is substance over form. So I have done IFRS, I have done Ind AS, I have done accounting standards, I have done US GAAP, I have done UK GAAP. Okay, I teach CMA US, I teach CPA, I teach ACCA, I teach Diploma in IFRS, I teach CA Final Ind AS, I teach CA Inter Accounting Standards. All the accounting standards in the world, I tell you, in the world, with all the confidence I have, I'm telling you, in the world, all the accounting standards are driven by substance over form. Are driven by substance over form. If you go to CA final level, when you read Ind AS, there is nothing other than substance over form. The whole Ind AS are revolving on 2 wheels. One is substance over form, another one is fair value. Fair value accounting, fair value. Everywhere fair value accounting. So till now you might have done historical accounting, but you know, the future is going to be fair value accounting. Chalo, anyway, so this is the correct journal entry. So do we agree on this for acquiring non-depreciable asset? Credit accounting, credit government grant to capital reserve. Can I say credit government grant to capital reserve? Are we done with this one? Are we done with this one? Hello, can we go to 2? Can we go to 2? In case of a specific grant to acquire a depreciable asset, like it can be plant and machinery, it can be any form of tractor or any motor vehicle, it could be bus, it could be truck, it could be some equipment, it could be computers. depreciable asset. Then you have how many options? How many options in accounting?
Reduce, sir.
3 or 4? Huh? Any doubt, ma? If it is a depreciable asset, how many options the accounting standard has given? 2 options. What are they? Income approach, capital approach. There are 2 options. One, capital approach. 2, income approach. So what is capital approach? Capital approach means, Pavan sir, 100 rupees worth asset, Pavan sir. 40 rupees I have paid, Pavan sir. What will I do? Simple. In capital approach, what will you do? Say, for example, bus. Value of bus is 100 rupees. State government has given it at, say, 75 rupees to you. Bus value 100 rupees. State government has given it 75 rupees. Okay, what is the journal entry you write? Bus account debit to cash. First you purchased bus for 100 rupees. And then you received 25 rupees grant. You purchased bus for 100 rupees, then you get 25 rupees grant. Now, cash account debit to, what should I write? I don't know. 25. I don't know what to write. Cash account debit, I know. I received cash. Sir, what to write? I don't know. Someone is saying capital reserve. Someone is saying capital reserve. I don't know. I can tell you only one thing. Capital reserve is not a dustbin. Capital reserve is not a dustbin.
We can reduce the cost of the asset protections.
Yes. So here what is to be written? Bus is to be written. This is called which approach? So the approach I have followed here is called what approach? Is it income approach or capital approach? It is called capital approach or it is called net approach. Because you are netting off the value of the asset. You are netting off the value of the asset 100, government granted 25, net off. It is called capital approach or netting of approach. Second approach is bus account debit to cash. 100. Very good. Second approach is cash account debit. 2. What is this? 2. I'll write 25. In income approach, I write 25. So can I say to P&L? No. DGG, Maria, excellent. DGG, deferred government grant account. This DGG is like equity. Deferred government grant, it is like reserve. So you will take it to your balance sheet. Now imagine this bus has 5 years life. So here in income approach, what are you supposed to do? The period in which the cost of the asset is charged to P&L as depreciation. During the same period, the deferred government grant is also to be credited to P&L. Oh my God. So this will be your depreciation expense. This will be your income. Here what happens, imagine the life of the asset is 4 years. In capital approach, life of the asset is 4 years. In balance sheet, what will you show? Particulars, this side liabilities, rupees, this side assets, rupees. So how much you are showing? Here you are showing fixed asset 75. So you will charge depreciation on 75 only. Say if the life of the asset is 5 years. Imagine if the life of the asset is 5 years. So in your P&L, how much you will show? Depreciation. To depreciation. 75 by 5. 75 by 5, 15 you will show. 75 by 5, 15 you will show. This is capital approach. In revenue approach, what happens, you know? In revenue approach, what happens, you know? Fixed asset, will you show at 75 or 100? 100. That is the reason it is called gross approach. Here you will show DGG 25. Oh my God. In P&L, you will show depreciation 100 by 5, which is 20, and by DGG 25 by 5, 5. So net off, if you do 20 minus 5, 20 debit, 5 credit. 20 debit, 5 credit is also 15 only. Fixed asset would be 16. No, in my example, I have taken 25 rupees grant. If the grant is 25, why fixed asset will be 60? Oh, you mean this 75 after depreciation? Huh? Akshay, do you mean this 75 after depreciation of 15 will become 60? Yeah, obviously, yes. Obviously, yes. So here what you show is, you show asset at gross 100, you show DGG 25. So every year depreciation 20 you charge on the debit, and every year DGG 5 on the credit. You understand? This is called gross approach or income approach. This is called net approach or balance sheet approach. Now, common sense. Let me see your accounting acumen. ICI said both are allowed. ICI said both are allowed. You can follow balance sheet approach or you can follow income approach. You can follow capital approach or net approach, you call it, or you can follow gross approach. But as an accounting student, what do you think? Which one is, resulting in true and fair view? Which one do you prefer? Which one you think reflects correct financial position? Which one is correct? So see, both are right as per accounting standard. As per accounting standard, both are right. So you follow first approach. Which one?
Income approach.
Income approach is better. Okay, someone is saying income approach is better. Okay, so some people are saying capital approach is better in the chat box. Some are saying income approach is better. If you look at it, income approach is better. You understand? See, asset is 100 rupees worth. You are showing asset at its true value. You understand? And you are also recognizing government grant 25, which is actual grant. And you are amortizing it over 5 years. So you're not taking the whole benefit to 1 year financial statements. 25 rupees is the benefit, but the asset is 5 years life asset. So 25 is recognized 5 years P&L. In 5 years P&L, 5 rupees each. Instead of 25 in 1 year, you are showing 5 rupees each. So income approach is better. Oh my God, Pavan sir, they asked fourth one, but what Ramayana, Mahabharata we are discussing, Pavan sir. That is where you learn the concepts. If you learn only this particular question, this question may or may not come in the exam. No. So my intention is not just to see if I want to explain this accounting standards to you, I can do it in half an hour also. But why are we having 2 hours class? Why are we having 2.5 hours class? Because, just to revise the concepts also, not only just to do these problems. I said Net approach because you are showing notional income for 5 years, na sir. It's not notional income. No, actually you got 25, Akshay. Where is notional income? Are you assuming and writing something from the sky? No, you got 25, dude. Government grant is actual. It is not notional. Okay, now you tell me 3. Deepak Rajas is saying perfect revision, sir. Thank you. Now you tell me 3. What should I do? Should I take it to capital reserve or should I take it to P&L? Is it relating to one particular year? What should I do here? For 3, what should I do? Hello, I'm asking a question. I'm expecting an answer. For government grants in the nature of revenue, what is the accounting treatment? P&L, khatam. Credit it to P&L. Simple. You have spent 100 rupees towards, giving treatment to patients if you are a hospital, or imparting education to students, or something in case if you are an educational institution, something like that you have done. So simple. When you incur cost, you'll write journal entry expense account debit to cash 100. When you get 40 rupees back, you'll write cash account debit to P&L expense. Simple. Okay, so staff training. You spent 100 rupees. What is the journal entry, right? Staff training account debit to cash account 100. When you get 40 rupees, can everybody keep in mute, please? Okay. When you get 40 rupees back, what is journal entry, right? Cash account debit to staff training. That's all. You'll take it to P&L. Okay, because simple. It is relating to that particular year only. So there are so many schemes like, this Arogya, what is that called? Rajiv Gandhi, Grahakalpa, not Grahakalpa, Arogya, something is there. I do not remember. So many, central government and state government schemes are there. So simple, if I am a dentist, for example, if I'm a dentist, I have hospital, one patient came with white ration card who is eligible for this scheme. So I have done the treatment, 20,000 rupees. I have forwarded bill to the concerned state government or central government. They have given 20,000 rupees to me. So what is the journal entry? Treatment, whatever I have done, expense account debit to cash, 20,000. Then when I get the reimbursement, simple, cash account debit to treatment. That's all. So that this need not be, amortized over a period of 5 years. No, this is an event. So take it to P&L. That's all. Then 4th one. After the whole 18, parvas of Ramayana Mahabharata, finally we came to what we want. In case of condition violation, sir, in case of condition violation, what we must do, sir? Simple. When you are, in case of violation of a condition, sometimes government grant will be refundable. If the government grant is refundable, you follow the reverse of the journal entry. For example, if you are following capital approach, okay, look here. If you are following capital approach, this is government grant recognition entry. Correct? This is government grant recognition entry. Is it right? Is this government grant recognition entry? In case of refund of government grant, reverse it. In case of income approach, what is recognition entry? This is recognition entry. Reverse it. So whatever the recognition entry is, you reverse it. Sometimes there can be difference between the book value of DGG account and amount I need to pay. Say for example, but Pavan sir, imagine, I have recognized 5 rupees from this DGG first year. I have recognized another 5 rupees in second year. So DGG in my books is 15 only. At the end of second year, because I have violated some condition, I had to refund 25 rupees to state government. So I paid 25. But what is the book value of DGG? Originally 25, but first year recognized 5, second year recognized 5. Today book value of DGG is only 15. But today I am refunding 25 rupees to government. What should I do? Balance should be returned to P&L, whether it is a profit or loss. So the day when you are refunding, here there will be no problem. Here there will be no problem. So whatever the refund government grant you are giving, you will write bus account debit to cash. In case of capital approach. In case of income approach, what to do? Simple. Whatever the amount you are writing, see, DGG account debit, P&L account debit to cash account. So this is actually how much is refunded. This is book value of DGG. This is balancing figure. How simple accounting is. When you are refunding in case of income approach, DGG account debit, P&L account debit to cash. How much of cash you are paying? Actually, how much you pay right here. How much of DGG is being reversed in your books of account? How much is there that you write off? Balancing figure will be P&L, whether it is debit or whether it is credit. That's all. Isn't it? Accounting is so simple, unless you complicate it. Sometimes student complicates it. Unfortunately, sometimes lecturer complicates it. Sometimes ICI also complicates. With due respect to every, teacher and ICI, just for fun, I'm telling you. Simple. Now, after, roaming the whole city, again, we came back to 4. If it is in the nature of promoter contribution, what to do? Do you remember the present question? The company has established a plant or a business setup in an industrially backward area with 80 crore rupees, wherein government has announced 25% incentive. So the company has got 20 crore rupees of government grant for establishing a plant, for establishing a business unit in that particular location. Is it for purchasing an asset? No. Is it revenue in nature? No. So what is it in the nature of promoter contribution? That is in the nature of promoter contribution. What to do? You tell me. Can I take it to P&L? No. Okay, very good. Can I take it to deferred government grant account? No. Can I take it to capital reserve? Can I take it to capital reserve? It is to be shown. It is to be shown as a part of owner's equity. You can name it capital reserve, but it is to be shown as a part of owner's equity. Now you tell me, if I am showing this as a part of owner's equity, can I show it in P&L to increase my profit? Previous accountant, you remember, who did wrong in foreign currency accounting, you kissed him with left shoe. Okay, this accountant, you can cut his hands and legs. Why? There cannot be a bigger fraud than this. If he is showing this in P&L, wicket gone. There is no true and fair view. There is violation of every possible accounting thing. If you are an auditor, you will express adverse report here. So what is the answer to the question? It should be shown. It should be shown as a promoter contribution under owner's equity. It cannot be taken to P&L. Dividend cannot be declared out of it. Income cannot be recognized out of it. Dividend cannot be declared out of it. It is not a free reserve. It is not a free reserve. Finally, we are done with this answer. So this question is over. Shall we read the answer? So can you read this question number 19A, please? So who's gonna read? Abhirami, are you reading this?
Yes, sir.
Yeah, read ma.
As per AS 12, accounting for government grants, where the government grants are in the nature of promoters' contribution, that is, they are given with reference to the total investment in an undertaking or by way of contribution towards its total capital outlay, for example, Central Investment Subsidy Scheme, and no repayment is ordinarily expected in respect thereof. The grants are treated as capital reserve, which can be neither distributed as dividend nor considered as deferred income.
Correct.
The subsidy received by Samrat Limited for setting up its business in a designated backward area will be treated as grant by the government in the nature of promoter's contribution, as the grant is given with reference to the total investment in an undertaking. That is, subsidy is 25% of the eligible investment, and also no repayment is apparently expected in respect thereof. Since the subsidy received is neither in relation to specific fixed asset nor in relation to revenue, thus the company cannot recognize the said subsidy as income in its financial statements in the given case. It should be recognized as capital reserve, which can be neither distributed as dividend nor considered as deferred income.
Superb. That's all. So this is thank you everyone. So did I say this? Since the subsidy received is neither in relation to specific fixed asset, whether depreciable or non-depreciable, nor in the relation to revenue. So how are you sorting out the answer? So this is the thought process. It is not this, it is not this, it is not this, so it is this. See how easy the answer is now to understand. Are we clear? Can we go to accounting standard 30, investment accounting? Who's gonna read? Aishwarya, you're there? One Aishwarya is there, one Aishwarya is not there. So who will read this? Kavi. Kavi, can you read this mic if you have mic?
Yes, sir.
Hi, read this mic.
Hi, sir. Mothermark Limited wants to reclassify its investment in accordance with AS 13.
Bold.
Decide.
So this is actually an easy standard, but the moment reclassification comes, oh my God, then okay, accounting standard 13. Thoda revision ho jaye. 1 second, 1 second.
Okay, sir.
So they are speaking about reclassification. So how many types of reclassifications are there? 2 types of reclassification. Reclassification can be from non-current asset to current asset. Current asset to non-current asset. That means nothing but long-term investment to short-term investment and short-term investment to long-term investment. Ta-dan, ta-dan, ta-dan. Do you remember there are 2 types of reclassifications in accounting standard 13? Do you remember? No. Sir, we do not remember, sir. So what is the rule on the date of reclassification? On the date of reclassification, what is the cost of new asset? What is new asset? New asset is short-term investment here. On the date of reclassification, what is the cost of new asset? What is new asset here? Old asset is long-term investment. Simple, ma. try to understand it like this. You are conducting audit of Pavan. Imagine you are conducting audit of Pavan. So do you want to conduct audit of Pavan's books or no? Hello. So if you are conducting audit of my books, it is obviously a tax audit.
Yes,
okay,
sir.
so you'll have to apply all the accounting standards. Now imagine you have come across one transaction. You have come across one transaction. Pavan purchased 1,000 shares in Infosys. Now you are conducting audit of my books, and then you call me and ask, Pavan sir, purchased 1,000 shares in Infosys, Pavan sir. Yep. You asked me, do you have an intention of selling this Infosys shares if the price increases, or will you hold it for long term? I said, no. I am a trader. I bought it at 1,400. The moment it becomes 1,650 or 1,700, I'll sell it off. Now you tell me, is it a short-term investment or long-term? Guys, comment in the box. Short-term, because I'm just looking at price movements. Or if I tell you that no, whatever I invest, that will be for my next 2-3 generations. I'll not even touch that. I don't need that money. If that is the case, it is a long term. Okay. Now, as per accounting standard 13, can I say short-term investment is to be valued at cost or market price or market value on balance sheet date, whichever is lower? Can I say this? Short-term investments are to be valued at cost or market value on balance sheet date, whichever is lower. Okay, this is called MTM. In stock market language, it is called MTM. Sir, my money in my pocket is empty. So MT is empty and M is money. So I am one bekar, zero money pocket. So is that MTM? No, it is not empty money. It is mark to market. Bad joke. So short-term investments are to be valued at cost or market value on the date of balance sheet, whichever is lower. What about long-term asset? Long-term investment valued at cost, full stop. However, if there is a decline in the market value of share, if there is a decline in the market value of share other than temporary, that means it can be interpreted as permanent fall. Other than temporary in nature. If there is a decline in the market value of share other than temporary, then a provision for decrease in the value of investment should be created and to be charged to P&L. Oh my God. If it is a long-term asset, then it should be valued at cost. Pavan sir, I bought Infosys share at 1,400, Pavan sir. It has become 1,500. What to do? Nothing. Sir, it has become 1,250. What to do? Nothing. Pavan sir, it has become 900 rupees. What to do? Nothing. Pavan sir, it has become 1,922 rupees. What to do? Nothing. Pavan sir, it has become 2,500. What to do? Nothing. Pavan sir, it has become 10 rupees. Pavan sir, what to do? Nothing. Long-term investments at cost, which is actually one kind of accounting anomaly, which is to be repaired. So probably in the future days, it will be repaired. But in US and UK, if you observe, even long-term investments, on that also taxation is there. Increase in the value, taxation. But, we are looking at accounting standard 13, which is, for, see, all these accounting standards are for kids, okay? all these accounting standards, nothing great in this accounting standards. Whatever 1 to 29 accounting standards you are learning, no, all these are putty fellows like street cricket only. No rules. So whatever you play is right. So majority of cases like that. This I have seen in my life. Okay, this is one of the most biggest painful moments. What is it? You know, there is one great bank called S Bank. Do you know S Bank? So actually it is S Bank, but you know, after a while it has become no bank. S Bank, I remember I bought shares when the price per share is 400 rupees. It is one of the, you know, one of the what we call sought after banks. One of much spoken banks before all this shit came. It was 400 rupees. We have accumulated thousands of shares. Then because of some uncertainty, it has come to 280 rupees. Added more. Then it has become 120 rupees. 120, 130. Something. Added more. Then it has become to 60 rupees. Added more. And what happened? It has come to 3 rupees. So on this day, say for example, only for example, okay, I have 10,000 shares at weighted average of 200. I have 10,000 shares weighted average. Now it has become 10,000 shares at a rate of 3 rupees. तो क्या करूं, मैं मर जाऊं? So here, what is 10,000 into 200? This is your investment. What is your value? So what is your loss? Khatam. Yeah. Bye bye. Tata. Goodbye. Nothing to last. Still that day, I am still okay. Why? You know, not because I have more money. I have seen two worst things than this. Kingfisher and Satyam, in both my investments are there. In Kingfisher, my investments are there. In Satyam, my investments are there. In Subex, my investments are there. In IVRCL, my investments are there. All these companies gone. Okay, so I have seen worst cases also. Chalo, anyway. So now do you think, now guys, do you think this S Bank, because of this, you call it frauds, or you call it inappropriate accounting, or you call it whatever the nonsense, fraudulent financial reporting, you call it, or misappropriation of assets, you call it, or siphoning of funds, you call it, or window dressing, you call it, you put whatever color you want, okay? You put whatever color. My question is there a possibility that this company price will go back to 120? Or is there possibility that it will go to 280? Or is there a possibility that it will go to 400? No way. Already 3 years over, 4 years over. Nothing is happening here. Nothing will happen. So now, do you think this, see, when I invested money in S Bank, it is for long term. When I invested money in S Bank, it is for long. So do you think this fall is, this fall in the market value of the share is something other than temporary? That means which is in the nature of permanent? Pavan sir, your wicket is gone, Pavan sir. Sorry. I'm sorry for you. This side hair is gone, that side money is gone, Pavan sir. So do you think this fall in the market price of S Bank is not temporary, which will be recovered easily? I'll give you an example. I have shares in Infosys as well. Infosys CEO resigned. Vishal Sikka, CEO resigned. So there is some fight between the promoters and the executive directors. So these executive directors led by CEO, there is some issue with corporate governance. This guy Vishal Sikka, he resigned. And he said that there is some nonsense going on in the board. I don't want to be here. There is next second share started falling. So within maybe 2-3 days, there is a 10%, 12%, 15%, 20% fall in the market price of shares. Panic selling. People started selling Infosys shares left and right. From that date, if you take exact 1 year, share got doubled. Can you believe? 600, 700, it came up to 600, 700, it went up to 1400, 1500. Then there was a share split. Again, it came to 700, 800 because of, share split 1:2. Again, it went up to 1400. That means 4 times wealth creation in 4 years. So when I invest, in Infosys, 1400 rupees, because of CEO resignation, it came to 800. Do you think this is permanent fall? Or do you think there is a chance of recovery? Do you think this is a permanent fall? Do I need to create any provision? No, it will bounce back. It will bounce back. So, guys, do you think in this situation, I need to create a provision for fall in long-term investment? Do you think in this situation, this, orange shaded situation, do you think I need to create a provision for fall? Yes. In this situation, are you understanding when, long-term investments are to be reduced? In this blue color situation, though there is a fall, it is not permanent fall. I don't need to create any provision for this. Now, this is valuation rule. Now, reclassification. When you are conducting audit of Pavan, you called me and you asked me, Pavan sir, you bought 1000 Infosys shares, huh? Pavan sir, short term or long term? Long term. My son will enjoy that. My daughter will enjoy that. That is what I told. After 1 year, 2 year, 3 year, 4 years, I called my auditor and I told, hey, Kavi, listen, I'm thinking of selling my Infosys shares. Then she said, Pavan sir, but you told it is long term. Yeah, I know. I told it is long term, but I'm in need of funds here. Chalo, there is no restriction. Will you kill me? If I say that this is my long-term share earlier, now I want to sell that share and I need some cash. Will you kill me? No. I have a business proposal. I can sell it. Now Kavi will say, okay, this guy originally classified this Infosys share as long-term investment. Now it is a short-term. What will be the cost? What will be the cost? So simple. On the date of reclassification, what is cost? 1000. Imagine. What is market price? Sorry. Long-term investment. Now, what is book value? Can book value be more than 1000? Guys, in this case, can book value be more than 1000? Long-term investment, I bought share at 1000 rupees. Can my book value be more than 1000? No way. It amounts to profit, no? Long-term investment, you can never do upward revaluation. Long-term investment of share, you can never do upward revaluation. Can it be lower? Can it be 900 rupees? Yes, it can be 900 rupees. Why? There could be a permanent fall. So 100 rupees reduced. Board of directors of the investor company thought the investee company market price reduced, which is permanent. So we created a provision for 100 rupees. This is possible. So now the book value or the carrying amount of short-term new asset, short-term investment is cost or book value of old asset, cost or book value of old asset, whichever is lower. Khatam. When a long-term investment is converted into short-term investment, the carrying amount of short-term investment is the cost or book value of the old asset, whichever is lower. Here, the carrying amount of long-term, here long-term is new, because this situation, short-term is converted into long-term. The carrying amount of long-term new is equal to cost or market value of old, whichever is lower. Khatam. Full stop. The whole concept is over. So I told you the valuation rule. I told you reclassification rule. The whole accounting standard 13 is over. There is nothing more in accounting standard 13 if you observe. You understand? So when you do problems, that weighted average and all will be there. But theory, when you read accounting standard 13, that's it. These are the rules. Now let us read the question. Okay. So can you read it, Ma, Kavi?
Yes, sir. Mothermart Limited wants to reclassify its investments in accordance with the AS 13. Decide the treatment to be given in each of the following cases, assuming that the market value has been determined in an arm's length transaction between knowledgeable and willing buyer and seller.
All these are, to confuse you. These are traps, okay? Market value. See, market value should be determined in arm's length transaction between knowledgeable, willing buyer and seller only. That is what we call fair value. So the moment they have given you too much of information, student will get heart attack. Nothing, they said it is fair value. That's it. No need to worry about this language and all. Read more.
A portion of current investments purchased for 25 lakhs is to be reclassified as long-term investments.
Wait,
as
can I say,
we'll
reduce the question into parts. Part 1. So can I say part 1 is current assets reclassified to long-term assets? Current investment reclassified into long-term investment. So this is current investment means short-term. Current investment means short-term reclassified into long-term. Then can I say purchased for 25 lakhs, cost 25 lakhs? Okay, read more.
The market value of as on the date of balance sheet was 30 lakhs. The fair value of the investments on the date of transfer is same as the market value on the balance sheet date.
So on the balance sheet date, what is the market value? 30. Market value is 30. Now you tell me whichever is lower or higher.
Whichever is lower.
Take 25. So in the books, new asset. What is new asset? Long-term investment. Should be recognized at 25. In the books, new asset should be recognized at 25. So in your books already, this cost is 25. What is the journal entry you will pass? The journal entry you will pass is, look here carefully. Look here carefully. Long-term investment account debit 25 to short-term investment 25. No profit, no loss. If there is profit or loss, it will go to P&L. There cannot be profit. If there is a loss, it goes to P&L. You understand? So long-term investment 25 to short-term investment 25. What you are doing? You are de-recognizing long-term investment 1 second. Current investment reclassified into long term. Correct. So you are recognizing long term investment, you are de-recognizing short term investment. That's all. Okay, now imagine. If the market value is 12, imagine if the market value is 12, what will happen? Here I have to put 12. Here I have to put 12. Here 25. Oh my God. Share. Here P&L account. Loss on reclassification. 13. If the market value is 12, this would be the answer.
So this is a conservatism approach.
It is, yeah, one side you can say it is conservatism, but the other side, till today it is a short term. No, till today it is short term. So you are following short term rule till today. For short term, what is the rule? Cost or market value, whichever is lower. So that is what you are doing. So till today, whatever the rule applies, apply that rule and bring it to new basket. You are taking one asset from one basket and you are putting in another basket. Whether first one is long term, second one is short term, or first one is short term, second one is long term, irrelevant. You are taking asset from one basket and putting it in another basket. When you are taking it out of the basket, till the time that basket rule is to be followed. Simple logic. Till today, which basket it is in? Short term. First follow that rule. What is that rule? Cost or market value, whichever is lower. Do that. How much? 12. So you bring to new basket 12. But Pavan sir, but in old basket it was 25. Correct. In new basket it is 12. Correct. 13 loss. You understand, everybody? Hello.
Yes.
If you understand, can we go to next point? Yay. We'll go to next point. Okay. Read the second part. There are 3 parts. Read the. We have one more question we have. We'll not be able to cover that because time is already 10:30. So we'll do this part 2, part 3. Borrowing cost, we'll see, some other time. But that borrowing cost is very important question. So Kavi, can you read second one more?
Yes, sir. Another portion of current investment purchased for 20 lakhs has to be reclassified as long-term investments.
Okay.
The fair value of these investments as on the date of balance sheet was 12.5 lakhs.
Simple. You tell me the answer. Anyone? Kavi, either you tell me or someone tell me. So is it the same case like part 1? Current investment reclassified into long term. Can I say this is also same?
Yes, sir.
Okay. Now you
cost
tell me.
Or fair market value, whichever is lower. So
What
we
is
will
cost?
take 12.5 lakhs.
Correct.
Cost,
so cost
is 20 lakhs, sir.
Fair value 12.5. Whichever
Fair
is lower,
value,
12.5.
12.5.
Okay, 12.5. Very good. Now, what is the journal entry? So, do you think there is a loss of 7.5, Kavi?
Yes, sir.
Yes. What to do with 7.5?
There is a loss. A debit to P&L account, sir.
Very good. That's all.
Long-term investments account data, P&L account data to short-term.
Journal entries are only for your understanding. You don't need to pass the journal entry in the exam. If you pass journal entry, nothing is wrong. But you don't need to pass. You will write descriptively, but this is how you should understand. Journal entries are always for understanding. When I teach internal reconstruction or any of amalgamation, any of the complicated topics, people feel they are complicated topics, even ESOP, even buyback. I will not explain any of the theory. I will just read one question, which is complicated, which is having so many folds. I will ask them part by part, write the journal entry, write the journal entry, write the journal entry. And after half an hour, they realize, shit, 20 marks question we have done. And today chapter started when Pavan sir even did not teach one theory sentence. One theory sentence I did not teach. But you read the line, apply basic common sense, pass the journal entry, chapter will be over. That doesn't mean I will not teach concepts. Okay. So after 1-2 questions, I will start teaching the concept. Okay. Read third question, ma.
Yes, sir. One portion of long-term investment no longer considered for holding purposes is to be reclassified as current investment.
Is it reverse
The
of 1
original
and 2?
cost of
Is it reverse?
yes, yes, sir.
Read.
The original cost of these was 15 lakhs, but had been written down to 11 lakhs to recognize permanent decline as per AS 13.
Okay. So what is the original cost? 15
lakhs,
but
sir.
Had been written down to 11 because of some permanent decline. So what is part 3? This is part 2. Part 3. What is part 3? Cost. How much, ma? 15.
15 lakhs. Sir.
Value. Don't take market value. Book value. In case of long term to short term, book value 11. Whichever is lower. 11. You need to take 11. So what will be the carrying amount of short term? New. What is new asset? Short term investment? 11.
11, sir.
11. So what will be journal entry? Short term investment account debit to long term investment account. P&L will not come into the picture because in 11, your books already it is there at 11. Are you getting my point? In your books already it is at 11. That is what we call book value, no? So do you recognize long term? Recognize short. I'll tell you one thing, okay? Excuse me. See, 10 rupees face value share. 10 rupees face value share is split into 1 rupee face value, 10 shares is split into 10 shares of 1 rupee face value. Correct? What is the journal entry you will pass? Equity share capital account debit, old 10 rupees to equity share capital account, new 10 rupees. This is the journal entry. But the understanding is here it is 1 share into 10. Here it is 10 shares into 1. Correct? Okay, guys, do you understand this transaction and this journal entry? In reality, journal entry will not be passed. There will be a board resolution, or there will be members resolution, whatever is required. There will be company secretarial compliance. Secretary will take care of all these things, and you don't need to pass any journal entry, dude. What stupidity it is! Equity share capital account debit 10 to equity share capital 10. In classroom, we have to pass. In classroom, we have to pass. This is also same. So do you think Pavan will pass journal entry, Infosys investment in equity shares of Infosys account debit to Infosys account? Stupidity. This journal entries will not be passed in reality. If I am passing, see, if I hold shares in Infosys, what will be the journal entry? I purchased Infosys shares. What will be journal entry? Investment in equity shares of Infosys account, investment in equity shares of Infosys debit to bank. When I purchased, that was long term. Now, if it is short term, do you think I will write investment in equity shares of Infosys account debit to investment in equity shares of Infosys account? No. But if it is required, this is the journal. Will not pass journal entry because in my books, in my ledger, short-term investment account will never appear. Investment in Infosys equity shares will appear. Long-term investment is not a ledger account. Short-term investment is not a ledger account. It is account classification. So basically, there will be no journal entry. But if there is journal entry, this is what it is. So Kavi, can you read the answer, please?
Yes, sir. In sir, as per AS 13, Accounting for investments, where investments are reclassified from current to long term, transfers are made at the lower of cost and fair value at the date of transfer. When long-term investments are reclassified as current investments, transfers are made at the lower of cost and the carrying amount at the date of transfer.
So do you understand these two lines? I have explained you in detail. Where investments are reclassified from current to long-term, cost or fair value, whichever is lower. Fair value is nothing but market price on the day. When long-term investments are reclassified as current, lower of cost or carrying amount, that means book value, not fair value, book value, whichever is lower. Simple. Remember one thing. Follow the accounting rule for the old asset. Follow accounting rule for the old asset. Determine the value. Bring it as the value of the new asset. That is the process. Follow the accounting rule of the old asset. Bring it to the new asset. That's it. Okay. Then read ma 1.
Yes. In the first case, the market value of the investment is 30 lakhs, which is higher than the cost, that is 25 lakhs. Therefore, the transfer to long-term investment should be made at cost, that is 25 lakhs.
That's what we discussed. Next, 2.
In second case, the market value of the investment is 12.5 lakhs, which is lower than the cost of 20 lakhs. Therefore, the transfer to long-term investment should be made in the books at the market value, that is 12.5 lakhs. The loss of 7.5 lakhs should be charged to the profit and loss statement.
This is what we have discussed. Correct?
Yes, sir.
Very good. 3.
In third case, the book value of the investment is 11 lakhs, which is lower than its cost, that is 15 lakhs. As the transfer should be at carrying amount, hence this reclassified current investment should be carried at 11 lakhs.
That's it. So no increase, no decrease, nothing. You understand this? So guys, all of you, do you understand this? AS 13 case, there are 3 parts. All the 3 parts we discussed. 2 parts are one side and third part is the reverse. Short term to long term and then long term to short term. Both are covered.